But I think that's like the points meta that then made people or made founders or companies that were like, oh, we don't actually know if we're ready to launch our token. The market might still go down. We don't know if the lows are in. So now we can launch a points program where we don't have to actually launch a token that could get dumped and sold off and airdrop to users and they sell. We can now just tease them with points. They can use our application, generate fees and revenue. And then when we're feeling confident that the bottom is in and the market's like going back to all-time highs or whatever, or is an attractive market to launch a token in, then they'll launch their token and they've made all these fees in the meantime, and they can basically retroactively reward these users. And I think at the time it seemed logical, but now it's just been like absolutely saturated that everyone that potentially has ever thought about having a token is now launching a points program that's completely open-ended and farming the farmers who are just like earning these off-chain points, and they don't actually know what it amounts to in the end anyway.
Welcome to the Deus Ex DAO podcast.
Hey everybody, welcome to another Deus Ex DAO podcast. And in this episode, we only have Deus Ex DAO members on, and we're going to chat about airdrops and points because that's a really hot topic. A lot of projects are launching their point systems, and we want to have a critical conversation, maybe even like a Socratic dialogue about what's happening regarding these point systems. So I'm joined by Kepler and Lute. So thanks guys for coming on. Yeah, it will be a free-flowing conversation, so feel free to drop any interesting feedback points, critical comments, or just pure frustration with with some of these point systems. So maybe I'm going to like kick off and ask like where does the point system come from? Like what's the origin story here?
Maybe I can jump in there. So I think from my memory, the first one that really did this in like a mainstream or a large style was Blur with their loot box, or they're basically trading point or the boxes that you could get basically and qualify for the Blur airdrop. But then I think beyond that, it was Friendtech really kicked it off this cycle. And I think that potentially will be the catalyst that we look back on in the future and think that this was sort of like the spark that ignited the degens and the bull run. I don't know if it will be that exactly, but I think that's like the points meta that then made people or made founders or companies that were like, oh, we don't actually know if we're ready to launch our token. The market might still go down. We don't know if the lows are in. So now we can launch a points program where we don't have to actually launch a token that could get dumped and sold off and airdrop to users and they sell. We can now just tease them with points. They can use our application, generate fees and revenue. And then when we're feeling confident that the bottom is in and the market's like going back to all-time highs or whatever, or is an attractive market to launch a token in, then they'll launch their token and they've made all these fees in the meantime, and they can basically retroactively reward these users. And I think at the time it seemed logical, but now it's just been like absolutely saturated that everyone that potentially has ever thought about having a token is now launching a points program that's completely open-ended and farming the farmers who are just like earning these off-chain points, and they don't actually know what it amounts to in the end anyway.
Yeah, I think that's a really important point as well that you make, that I think that's like the main advantage that points have is that you kind of separate out the time where you basically give rewards to people and then where you actually make them tradable. Because if you think about it, like what you want rewards for is basically to bootstrap a network. Because usually at the start, a network doesn't have a lot of value, and when it grows, it has more and more value. So like tokens are kind of a way to redistribute that value to early adopters because they took on more risk. But the problem you have there is when you give the token at the start, usually like the product doesn't have a lot of value. So the token doesn't have a lot of value. So people that just farm it and dump it, which is kind of what we saw in DeFi with like just liquidity rewards, right? Where like all the mercenary farmers were. So points, what they basically allow you is to bootstrap this network, but to kind of have the token more speculative at the start. And then basically you can have the product to build more value first and then drop the token once basically, yeah, your network has a certain value reached that hopefully also translates into the token. So I think like that's the main flexibility that you gain from it. But yeah, as you said, like it has been, I guess like teams really went far out the curve and just used it to, yeah, basically have no plans for a token ready and just, yeah, use it to get some attention. And that's like the wrong way to do it because you still need to do all the token design, all the product work. So yeah, just like slapping a point system on top, that doesn't solve anything. And I feel like that's, yeah, basically where we are in the market right now.
Yeah, but like I think one critique on that is that first there was like speculation from users trying out these protocols and trying to farm that airdrop without them knowing that there was like a hidden point system or even an airdrop. So that was creating like fake activity, basically, not real usage. And as you mentioned, there's that with the point system, you at least get some, well, usage, but it's still not real. So it's still the speculation on that token. So it creates maybe the illusion of a product market fit. How could that be prevented? Because yeah, I think basically that was also, I think, a request from a lot of funds or VCs in the bear market, like, hey, show us some traction first for your project before you're going to send us a token and before we actually want to invest in this. But it feels that projects have created now a system that shows them like, hey, we have traction and look at all this TVL and all these users, while the users are basically still doing the same thing, like speculating on an airdrop. We only created a point system on top to show like others that we're doing a better point system maybe in another project, but it's still not real usage. It's still speculation. Yeah, how could that be prevented in a way?
Yeah, I think the issue has arisen from when airdrops became standard practice. So basically, any big protocol that doesn't have a token, there is some sort of speculation on there that I need to keep using this platform because eventually they might have a token and I want to qualify for the airdrop. But points have just made that very obvious of what value add activities that you can perform and that what they value. So for example, Rabby have their airdrop at the moment. You make a swap, their points program, sorry. You make a swap in their platform and you get 10 points per day. So it doesn't matter what size the swap is, what chain it's on or anything like that. So you could be swapping 1 USDC to ETH on Arbitrum or on Phantom or whatever platform or like whatever blockchain and paying minimal fees and still earning 10 points a day. And there's no way that they're making money off that. They're just like letting themselves be farmed. So I think that it's like a very obvious way of doing it now. I prefer the style of airdrop where it's very retroactive and it's like the platform or the application or the blockchain themselves, they have like their internal points criteria that they rank, and it tries to exclude syllable farmers or people like that, and something that's a little bit more ongoing. So you see like Optimism had their like waves of airdrops. So for example, if you didn't sell your first airdrop, then you qualified for the second one. And then if you staked it or if you delegate it, if you like perform value add tasks with the airdrop received, then you may qualify for the next one. Where points just seems to be like very extractive, like, oh, this is the action that we want you to do and you earn the most points. But then people just farm that. It's not actually genuine usage. So I think, more back to your question, Ape, is airdrops, when they're retroactive and rewarding real usage, and there's filters for that, I think that that's the best. But we've created this like devil where everyone's speculating on every platform without a token because they think that they'll have a token eventually. So I need to just do all of these different things to qualify.
Yeah, I think it comes down to like similar criteria as for play to earn, which is basically that you kind of don't want to reward people for actions that they can Sybil attack easily or that they can bot easily. I mean, of course, you can pay like some of the airdrop, you can pay to these people because it just gives you attention. But like the vast majority of your token airdrop should probably not be allocated to that. So I guess that then it comes down to really like starting from the beginning and just like what are our users and what are the actions that actually build our product? What are actions that the users have to take so that they are more likely to retain? So that's like what you call North Star metric in like Web 2. So for Facebook, I think it was like having connecting with 6 friends in a week or something at the start. So that's where it's like points system comes in, or just like tokens in general is just, building, guiding them towards these actions that they can take them and just make them more likely to maybe spend later. But of course, by just providing these incentives, you kind of already fuck up your math because like the conversion rates will change because you have the self-selection. So you have to account for that to basically make it ROI effective, the airdrop campaign. But yeah, I think that, just really starting from what actions should users take and then finding the ones that are like hard to Sybil attack. And it could just be ones that are in theory easy to replicate and without much cost, but you can like basically use on-chain data to weigh them differently for different types of users, just to basically not dilute your actual users with like too many of these Sybil attackers. That's how I feel like it starts, and then after that you can really look into what really helps maybe build a network effect of the product as well. So first you start with the users and retaining them, and then like how they can basically support each other in the network.
I think maybe to defend points in a way here, and maybe going back to Friendtech, and I know that they're out of favor at the moment, but they did something that was very interesting. And there was like the speculation each week when they distributed the points of what the weightings were. And I think that if used correctly, points are a really good way to navigate or direct your new users around your application and get them to like try different features and provide feedback. So say you've got a wallet or you've got some sort of application and you want a lot of users to try different things. Well, then now you can direct them with points and you can favor one specific aspect of your application per week or per month or whatever your like epoch period is. And then you can try and gather feedback from that. So I think that they can be used for like a value add for the project, but I think that potentially those points don't convert to an airdrop. Maybe that's just part of like a beta test or some sort of like early adopters program where you can mint like an NFT or something like that at the end that does give you an airdrop, but it's not specifically farmable on, I now have 10,000 points and I'm expecting the valuation to be X and that's what my conversion is. But I think they definitely can be used for like product testing and customer feedback. But we're not seeing that at the moment. Like the amount of rehypothecation we're seeing on these like liquid restaking protocols where deposit your ETH here and you get eigenlayer and pearls and XYZ points. It's like ridiculous now how you can qualify for 5 different points programs in one hit by depositing 1 ETH in one platform.
Oh, okay. Yeah. Just what you mentioned with like guiding users basically to explore different features. That's exactly also like how games do it. So points are, in my opinion, just part of like a gamification system. So yeah, you basically lead users through doing certain actions, which retain them better. And part of that is definitely like, testing different features and exploring them, and then rewarding them for that. But yeah, I guess like if you just use points for that, you're kind of missing out on everything else that you can do to like gamify it. Like usually monetary rewards are like the last step that you do to reward people, because it's kind of difficult, because now you have extrinsic motivation and it crowds out like intrinsic motivation. So why people really want to use the product, which is to have get a certain value out of it, that is like non-monetary. So usually you should also think before doing points, maybe or just what the points get you. Maybe it's not the airdrop, but status, access, and these are usually the preferred rewards that you want to give users for going through like the guided funnel that you provide them with.
Yeah, and this is basically what I liked about the airdrops, was that it gave like the first idea for a protocol, like, hey, how are users using this from a non-guided point of view, because they had to speculate like what's important for a protocol, and then they started trying that out. It's not really the natural response, but at least it's testing what the user sees from the protocol and like what they think is important about this protocol. So you can basically test some of your assumptions here. But I think this is the improvement in the point system, as Lou just mentioned, where you can guide them and basically do a better beta test, lead them to certain areas of your app, and either do that as an onboarding process or as a testing of like these new features. And then you can get activity, you see what's happening, you can tweak whether it's real bugs you find in whether an interface on the smart contracts, or just like testing your expectation of how a user would behave. And of course, that's the problem. It's incentivized, so there might be different behavior, but at least you get some volume through. But I still think it can be improved because right now, actually for airdrops, that was mainly just on-chain activity. What I like with these point systems is that they're also integrating other channels. So often, eventually at the airdrop, there's like Discord roles or some NFT. There is some reputation style mechanism in there, which also gives that like an off-chain aspect to that on-chain aspect, that real social network thing that's being incorporated. So I think that's being done also better with point systems, the invites, but I feel there is still more to be gained from the user. Like, what is the user really thinking about this protocol, where it's useful, product features. But I think that will be a next step in doing actually user research with this. And that's fine. Like that's what in Web 2 has always been incentivized. Like review and leave a comment, and we'll send you a gift card. Well, you can do the same with crypto, and then do that worldwide without bothering which gift card to give or which countries to exclude. I think that is actually a very good improvement in crypto, because you can exchange that value worldwide. So also get your feedback from your worldwide user without limiting yourself on that. So I hope to see that more in next iterations. But it's slowly going there. And of course, gamification helps, but I think it really depends on what goals you're setting as a protocol. So do you want to onboard a user, and do you want to check your onboarding experience, or do you want to check your protocol, and is it more like a beta test? So right now, from just the face of it, it's not super clear what some point systems are trying to do, and I'm not sure if actually the projects ask themselves correctly, like, what are we trying to do with this point system? So yeah, I think you don't want to share that as a project too much, because that will be game. But in hindsight, like after point system ends, you could make that clear. Like, hey, what were our learnings? What did we improve on our project? Which I think if you really airdrop a token, will show like those holders like, hey, you've been thinking about this the right way, or you're tweaking this. So we have more trust that you will retain those users or attract new users that you haven't seen in this point system. Yeah, so like more as a point system, as a feedback and user onboarding, because I feel that's one of the problems I think that we will see. One thing that happened in the last bull market was all these farming activities and the users basically extracting value. They would get the token, dump it, go to the next protocol with a high APR. I can see the same happen with point systems, where eventually everybody gets so diluted in attention. They farm all of this and then they go to the next farm. And then you still have the same situation. You only gamified it differently. You didn't emit a token, you emitted points, but they will still dump your token afterwards. So in that aspect, I don't think the point system solves that problem yet. What are you thinking about like user retainment after or during a point system?
Yeah, I think you said something really important at the end, which is point system don't solve that. And I think like actually point system don't solve a lot. The only thing they solve is giving you more flexibility or not really flexibility, because to have a good point system, you kind of need to have an idea for the token, even if it's not live, because there's so many points programs. So I think you need to be very specific with like how big the airdrop size will be, what the token utility will be, to get like any attention in the future with your points program. But the thing it gives you is this time lag that you can make use of between giving the incentives and then giving people the tokens to make it all tradable. So I think that's like the only thing that points solve. But yeah, the rest is like the same thing that you had to do before with like any incentive structure that came before that. Because I mean, even retroactive airdrops, they didn't have points, so they were actually worse for users because they didn't have any idea of how much they will receive. So I feel like points are an improvement, but people hate on it because they see like that they are getting farmed, but they were getting farmed before that as well. So now it's more transparent. But the problem isn't really the point system, but just that projects make really bad tokens. And when you have a bad token, you can't do a good point system, basically. So yeah, points don't solve that.
Completely agree. And I think it will be interesting to see when these points programs come to an end and the tokens eventually launch, how they perform. So we have seen some large high profile airdrops lately, but none of them, from my understanding, had a points program. So these were just like retroactive airdrops that, like, for example, Celestia was for GitHub developers, for Ethereum, or like EVM users, for other users. So I think that there was no way really to game it. If you're using like Arbitrum or Optimism or whatever, you're going to you qualify in some way if you're a genuine user. Obviously there are ways to game it, but I think now that we see some of these points programs coming to an end, so I know like again Friendtech have finished theirs, there'll be a lot of these like eigenlayer liquid restaking token points programs that are ongoing now, and I saw like another one launched today. You would imagine they would all wind up at around about the same time. It will be very interesting to see how the tokens perform.
Yeah, so I think that's an important point, because of course Celestia led the way and is like the most important airdrop in this market. But the thing with that was no point system. And actually there's now point systems that include these Celestia users, and they get extra points, or they just get more airdrops from other protocols. So that one is still the most important, while it didn't have the point system itself. And then I think time-wise, having those points eventually lead to a token. If these all drop at the same moment, there's, I think, a lot of usage in sorry, a lot of users that suddenly have a token, but yeah, they could probably do that and dump that open market. So yeah, that that will also lead to a problem, because now the airdrops have been quite spread out. So even like the Solana ones, like Jupiter, Jito, they were just airdrops, not even point systems, and they've been met with a lot of buying demand and actually keeping up quite some value of the token, setting high fully diluted valuations and market caps. So I think the thing with these airdrops like Jito and Jupiter is that even though they didn't have that point system, the valuations were quite high because the market demand was there. So Lou just mentioned that once all these point systems stop and there's an airdrop, if that all happens at the same moment, like where's the demand coming from for those tokens? And will users actually be, in hindsight, not see their token just like dumped directly, which will lead in to like a negative perception of all those point systems. So in a way, we actually don't want everybody to enter point system at the same time, because that will just dilute everybody that's been running for these airdrops and trying to farm these points. Yeah, so like that's the question, like where does the demand eventually come from after the point system for such a token? Very open question.
I mean, I think it's similar to what we're trying to solve for, like, at least since DeFi summer, which is who should we reward? And like points don't fix this. I think like the best way to do this is just use more on-chain data and maybe even off-chain data to basically group users into different segments. Because yeah, I mean, if you also just reward people for an action on your platform, it kind of doesn't really give you a lot of information about them, because especially since they're incentivized to take that action, right? So you should also look at what they did before off-chain and especially on-chain, and especially like activity that either requires a certain skill or a certain amount of money to make sense. Yeah, just to have like high quality signals. And then like once you give points and afterwards tokens to the right users, you already limit the supply that will hit the market, essentially, because most of them will like, or hopefully they will hold the token. And then the rest, like where does demand come from, is basically you kind of don't want to give everyone the chance to farm the airdrop because the people that don't get the airdrop are basically your demand at TGE. And then, of course, based on your tokenomics, the better they are, the more people are willing to A, hold the token, and B, to increase the size beyond like what they got airdropped. And I think, yeah, that basically comes to a lot of that is essentially the network value that you can create through the incentives before. And if you basically can retain these users. So again, doing like a DeFi analogy, in DeFi, we had basically rewards for LPs, but liquidity turned out to not be so sticky. So that's like not a good way to build a network effect. For example, social media, usually activity is more sticky. Because yeah, especially if you have like one-to-one relationships between people. We don't need to get into details, but yeah, basically you just have to think about like what's the thing what basically has high switching costs and where do they come from, and you kind of want to incentivize that. And since most of crypto is like a two-sided marketplace, at least, I think there's always something there. Yeah, because you usually need one side to bootstrap.
I think there's one good point I want to dive into, like that the users that didn't get into the point program might still be interested. And I think I saw that also with these like token sales. Yeah, there's still demand after that. And I think the same would be happening with point systems, that only some people who have time to either farm these or find these new interesting protocols, they get in early, and they put in the work, which is actually what you want as a project. But even though the users that don't get into that points program, they see that at least the token isn't the rug, because they put time into this to manage a point system, which creates some kind of social verification, that like stamp of approval that project is actually valid. So in a way, I think that's actually a benefit, and I can imagine that's where maybe demand for a token comes from, or at least shows like, hey, this project should be more sticky than others, and I can trust this, even if I'm not like a daily crypto user.
I think that the demand's an interesting one, though, and it brings us to another aspect, I suppose, of the points market, which is now we can OTC trade our points. So if you are someone that hasn't farmed them or hasn't participated in any of this like points gathering, you can now go into like platforms like Whales Market and buy points off other people that are looking to like hedge or exit their position early. So I think that by doing that, we've created this sort of semi-liquid market for points, and it kind of defeats the purpose of the points in the first place, because now they just congregate with the people that are speculating on them the most, that are like, they've purchased these points now, so they're not going to just like, well, it's unlikely that they hold them as like an aligned community member. They're most likely doing this for a trade, and they've purchased the points and now they're going to sell them at hopefully for a profit. So I think that that is also something interesting. And then we see other platforms like Avo that have these like liquid perps markets for tokens that have not launched yet. So now we have all these ways to hedge our points and to airdrops. So I think it makes it really interesting of like, where does the demand come from? Because now, no matter where you are or who you are, you can basically purchase the token before it's already live anyway. So exactly what Kep said, who purchases it on day one?
That's a really good point. Also, because it basically, like, Whales Market is really hard for projects that have shit point system. Because yeah, if you reward the wrong actions, like people will just farm it and sell it, and basically once your token launches, all the demand will already be on like basically everyone will be positioned via the OTC market. So your chart will look like shit. So who doesn't really have problems with something like Whales Market is projects that drop their points to the right users in the first place. And these are the people that are like, yeah, these are the projects that are less targeted by Whales Market, I feel like, because yeah, like if you target the right users, then they won't sell, or they're less likely to sell. Yeah, for them it still works, but for others, they will get wrecked by Whales Market. That's just the market dynamics. The only good thing right now for them is that Whales Market is kind of capital inefficient. So that reduces like the trading volume for points. So yeah, but I guess like that will probably be solved in the future, and then yeah, most point systems will basically die because they never had a chance. But the good ones will still work.
Yeah, and I think that's what I'm interested in. Like, how will the unwinding of all those positions happen once the point system finishes? Like that will be interesting, because you will have people who have hatched their value of their points because they sold them on a Whales Market. And once the final like launch price settles, you have a winner on one side and a loser on another, which then creates the unwinding of these positions. And I think that will, because of that speculation, that will actually drive some initial price action So DAO has to like unwind, and then you actually see the real demand. But I think that shows maybe how all those people who were thinking about this point system and about this project, like what would it be worth, it will show like, hey, who was right and who was wrong, which will give the rest of the market the information, or like either confirmation they needed for it to be bullish or bearish. But yeah, I think it's actually really funny. We went full circle where first you would just have a token, and the token was a way to speculate on the project. But now you have like, you can speculate on the point system, and the point system is a derivative of actually the token value. And the token value is then a derivative of like what you think the project is worth. So it just created another layer, which I think is one of my critiques on these point systems, is that most of it isn't actually just led by on-chain activities, like also other activities. But it creates like a less clear scoring system. So maybe there will be projects actually like abusing that in a way where they suddenly see there's a lot of speculation on one end, and then they flip the mechanics. So in one way, yeah, you could drive user value one way or another, but then you flip your scoring system, or actually how much rewards are going to one user and another, and basically you manipulate the market. It will only happen for like the non-serious projects, or projects that try to extract as much value as possible. But because it's not really directly on chain, there is some manipulation that could happen with this. So that's what I'm a little bit afraid for, that eventually will happen at a later stage in this market.
Yeah, and I mean, points trading is, yeah, as you said, it's derivative of a derivative of a derivative. It's like, the problem is when you trade points, but you don't know how many points are there in total, or how much of the tokens will be airdropped to the points. There's no way you know how much like points a certain, how much tokens a certain number of points will get. So it's, yeah, it just makes the market so weird. But yeah, I guess that's just how it is right now. And maybe to your point about value extraction, I agree that, I mean, right now we're seeing a lot of value extraction with point systems, but I also feel like some degree of value extraction from projects is okay. Also because you kind of want people to spend on your product, even if it's just partly incentivized by speculation, because I mean, once someone purchases once from you, they are more likely to purchase in the future as well, even without incentives. So it helps with user retention and like long-term revenue generation. But of course, it has to be balanced with like rewarding the right type of users. So of course, you don't want to just reward the high spenders. That's because, yeah, that basically turns your points program into a casino. But yeah, I think it's okay for you to basically tax all the speculation partly. You just have to be smart about it.
Yeah, and I think that's important point. Like, the projects get some value back while not just being extracted from their tokens or any other value, which is, I think, one theme I actually like about the point systems, but also with other mechanisms like option liquidity mining and bonds, although those haven't gotten any attention yet from the market, or not a lot, while I would have expected that. Of course, point systems are more easy to follow and easier to game, so, and easier to jump into as a normal user, instead of like LPing, getting those options, understanding how they work. But yeah, the balance between projects getting some value back and the user extracting some value can be much better set from basically both sides. Yeah, that's, I think, an improvement.
Yeah, I think like when comparing it to options liquidity mining, I think one part is definitely the educational piece, that points are easier to understand than options. I think the other part, probably more important in my opinion, is that points basically provide you with unlimited upside in theory. Like for options, you're limited to what the option gives you, right? But for points, you can dream of like 300% APR, like some people do for Eigenlayer, which you will never get. But yeah, just this thought basically leads to speculation, leads to attention, and that's why points are, I guess, like the go-to mechanic right now for acquiring users, compared to options, which are more conservative in a way that they're like closer to the existing token rewards that we had, and they are, yeah, I guess, they are more transparent, which helps to get like a certain type of user. But like the overall, or the vast majority of crypto users just want more speculation than options, I guess.
Maybe we should end on a little bit of a positive note, like looking forward in the future. Like what do we want to see for point systems? Like what features should they add that will improve them? Whether that's better for the project or a better experience for a user, maybe a variant we want to see. Maybe we can start with Loot. What's your future vision for these point systems?
Yeah, so I think they definitely have to try and benefit the project more. So it needs to be a dynamic point system, I think, that really stress tests your hypothesis or your like thought of what your product market fit is. So for me, they're a great way of stress testing your product with users and with what they like, whether it's different features or the UI UX or anything like that, and capturing feedback in like a short amount of time from a mass amount of people that are coming to your platform. And it's also very good for stress testing your infrastructure as well, to see if it can handle the load that comes with sort of like an influx of users all coming at one time. And I also think that it is a good way for these projects that are trying to exit out of a bear market to make some money from fees as well. Like it is very hard to find product market fit, and points can sort of band-aid over that. So it's a way that they can find, make some fees, get some product feedback, and all these sorts of things. But I think that it needs to be a dynamic points system. And I don't think that it should be sort of displayed in the very obvious place. It could be maybe something that you announce that you're having a point system, but you're going to be like focusing on different aspects, and the user has to sort of guess of what those aspects are. Or perhaps you encourage feedback, and then with that feedback, if it's actionable, those users get points. But something to sort of stop the syllable farming, but actually extract some value, but not just fees out of the users, but actual sort of product value that you can use to make your product better. Because in the end, that's what we all want, is just good products that we can use and that can onboard sort of like the people and fulfill the vision that we want to, not just some like casino points platform where everyone's just going around sort of circle jerking each other with points.
Yeah, I agree. Like overall, actually quite positive points. Yeah, basically because of their main advantage of bootstrapping network without having to have like a tradable token at the start. Yeah, but I guess like how I see it develop, teams need to basically come to a decision about the product, then the token, and then lastly do the point system, which is kind of like a go-to-market strategy for the token, I guess. And that plays also into, yeah, how the token basically relates to the product. yeah, I guess that's like the main thing I kind of want to see in the future, going back to the focus on product, token, and then points, instead of doing points with no idea what the product is, how to monetize it, or where the token comes in. What we might see is that teams do points. They see that they kind of don't work for them because they basically just reward people for making a transaction, which is not really a good sign of adoption. And then they will probably, yeah, basically it's similar to like play to earn, I think, the development, where first we do play to earn, then people see, oh shit, it doesn't work. And then they basically go back to not rewarding anything. So I kind of expect them to like go back on their points because it's off chain, right? And they will just exclude all the Sybil farmers. But of course, you can't really do that. So you will also exclude some real people. So they will get a lot of backlash from that, because basically the points are there to make it more transparent, but now you're making it less transparent again. And then basically teams have to compete again on more transparency, because otherwise people won't use your protocol. So I guess what then will come up next is that you kind of tell people again like how much points they will earn, but you kind of segment them beforehand. So it basically tells you, oh, you've been a Celestia staker with this many Celestia, or I think what they should actually do is just take on more information, like, oh, you used 10 different DeFi protocols before, used this and that, you hold these tokens, these NFTs, and then you kind of like segment users into different tiers, and then you tell them, oh, you can do these and these actions, and then, for example, like tier 1 users, they get 10 points, and tier 2 users get 5 points for that, or something along these lines, because that's how you, yeah, basically you reward people for doing certain actions, but you weigh it by your best guess of what their actual value is, because you can't just take their action because that's monetarily incentivized. So that's where I feel like it goes. So it's like points, and then you kind of exploit them, make them less transparent, and then you make them more transparent, but upfront, and use more data, because that's how you do user acquisition also in Web 2 to make it efficient. Yeah.
That's actually a very good idea that I hadn't thought of, is sort of combining the old retroactive style airdrop where the on-chain actions of a user is used to group them. And then from there, they're put into categories, and each category basically is awarded an allocation of points. So if you're a syllable farmer that's got a fresh wallet, then you go in with all the other syllable farmers, and there's like 10% of the points are left for you, and you can just syllable for them. And then if you're a genuine user that has like an on-chain history, maybe your wallet's over, I don't know, 600 days old or whatever, 500 days old, then you can go into a category of like genuine users, and then your pool of the points that you can earn are then higher. So because I think that these points programs, or a lot of this airdrop farming, it's not the genuine users that are farming these, because they've been around, they're sort of can't be bothered, or they have made enough money, or they're like portfolio size is large enough that they don't need to be spamming these programs. So it's generally the people that have got 1,000 wallets and they're all trying to make a lot of money off airdrops. So perhaps that's a way of excluding or trying to actually reward genuine users still with a points program, is separating them into categories first. And then from there, it's like very clear what your point accrual will be, because you're just sharing it with users that are equal with yourself.
Yeah, exactly. You get diluted less if you're a high value user, because other Sybil farmers basically dilute themselves, but you are pretty much, it's like a real user. You are good. And yeah, basically what it does, you kind of look at users, try to see, okay, what's like their customer lifetime value based on different data points that you have. And then you basically just award points that are related to that, so that your customer acquisition costs are related to your expected customer lifetime value. And yeah, I guess that's kind of what we're building with GG Quest for gaming right now. So quick shill in the end. yeah, that's what I'm working on actually.
Yeah, I'm fully aligned with this. I think this is where crypto, like Web3 growth, can learn a lot from like market research, Web2 analytics. Basically, is that once you understand the user, previous on-chain activity, you can ask them questions. And I think that's one point that Lute made, like ask them for better feedback, ask them for what they think of the protocol improvements, let them do suggestions. And I think that's what I haven't seen yet, but I hope protocols will do, like better user research, not just in a Discord once in a while, once a user complains, gather feedback back, but more topic wise, maybe structured questionnaires combined with some on-chain activity, see where you can improve specific points in your protocol, in your product, and then the user is really improving the product and giving you the valuable feedback of what you should build. And then the token becomes more valuable too, because you've built a protocol that the user actually wants to see. You know exactly what tokens they want. You know exactly what protocols you need to integrate with, instead of like letting that be turned by hopefully a DAO that starts voting on this and participates. You already created that participation because the user literally told you what they want to see. So I think it's also a better precursor to building a DAO, and keeping some user in. And then the question is like, how do you retain that user? But I think that's a point for another episode. So, well, thanks for coming on. I think this was a very critical but also open discussion. I think if you're listening to this as a project, you can also visit deusexdao.com/tokenomics. We have some templates you can fill in to think about your users, your stakeholders. Where does the value come from? We're happy to spar with you too. So there's a form you can use to reach out to us. We'll put a link in the description. But I think this was a nice conversation with you guys, and I think I learned a few things about being critical on these systems. So thanks, Lute. Thanks, Kepler.
Yeah.
Thank you. Thanks, guys.
Yeah, it was a good discussion, and maybe in like half a year or a year we can do like another summary of what happened in the market.
Yeah, see how right or wrong we were. That's good. Yeah. Okay, thank you for listening, and see you again in another Deus Ex DAO podcast episode.
Thanks for tuning in to the Deus Ex DAO podcast, a place where some of the most progressive and innovative builders, thought leaders, and traders in the crypto space come together to discuss all areas of the crypto industry. Whether you're into DeFi, Layer 1s, Layer 2s, NFTs, or anything in between, we've got you covered. And as a reminder, nothing said on this podcast should be construed as financial advice or as a solicitation to buy or sell any digital asset or security. The comments, views, and opinions expressed by the hosts or guests on the podcast are their own. As always, you'll need to do your own research.